Hello, everyone. I'm Natalia Wilson, and I welcome you all to Kivitec's 808 workshop for startups and entrepreneurs to help them navigate the challenges of starting a business, making it sustainable, and taking it to the next level. Our two mentor sessions today are on topics raising capital from investors, the SEC's resources by Julie Zelman Davis, Senior Special Counsel, and John Cavanagh, Special Counsel at U.S. Securities and Exchange Commission. Second one being UI UX design, the game changer in your product's journey by Amanpreet Singh Buller, Creative Director at Kivitec. Before we begin with the first session, I would like to invite our VP Venture Capital and Corporate Partnership, Jessica Chin Fu, to give a quick overview of the company. Over to you, Jessica.
Hi, everyone. Thank you for joining today. Very excited about the topic. But for those of you who may not be familiar with Kivitec, I'll just do a quick rundown of who we are. Here you could see a little bit of our ecosystem in terms of the stakeholders that are joined within Kivitec. We're really a global community of entrepreneurs, founders, investors, mentors, and even corporations that come into play in the early stage for startups. We ourselves have about 500 plus portfolio companies that we have acquired equity through providing technology services, actually globally the largest scaled one of 100 million. And we have about 3,000 investors in our network that are engaged, looking at deal flow from us, and to that have raised over 100 million. We host value-added events on an annual basis of 100 plus and have mentors as well. How did we get here? So this is the second venture from the founding team. The first one, Dave exited at 144 million, and having entrepreneurial DNA in their system, really wanted to see and support as well early stage founders. They've launched out a startup program in 2013, providing an equity link model to providing software development services. They've launched as well a platform from creating value add to accessing capital, but also resources, knowledge, community to provide entrepreneurs a safe space to grow. We have, as I've mentioned, over 500 plus startups in our portfolio. We've done a couple acquisition and acqui-hires, extending the services that Kivitec provide to early stage startups. And we're on track to reach over 1,000 within the next couple of years. Some of our capabilities, as I've mentioned, technology services are one of the started as the core with some added on service from due diligence for investors, review, financial and accounting services, events, digital marketing, and crowdfunding support. This is the array of events that we host. We really aim at opening up dialogues that brings value to founders, and investors as well to join in their peers, whether family offices, angel investors, or venture capital, but also opening up a dialogue to bring more resources even for those founders that may not have access, such as our Black and Brown founding community, along with our female founders. So excited now to pass back on to Natalia for the remaining of the workshop.
Thank you so much, Jessica. Now I would like to invite Julie and John to take over the floor and start with their mentor session. Over to you, Julie and John.
Well, hopefully you all can see me. I'm Julie Zelman Davis from the SEC, and I'm joined by my colleague, John Cavanagh, who is also in our office of, we have the office at the SEC with the longest possible title. It's the Office of the Advocate for Small Business Capital Formation. And with that long title comes a lot of different responsibilities, and we will today walk through those. But before we get started on any of our presentation, we always like to get a sense of kind of who's in the virtual room. So if you could just see a little raise your hand button down at the bottom of your Zoom screen, just would love to get a sense, because I know Kivitec collaborates with a wide range of businesses. So I'm going to ask you to raise your hand for a couple different things, just to get, so we can get a sense of kind of where everybody is. So first off, pretty easy question. Raise your hand if you are an entrepreneur. And by that, I mean, take it broadly. Have you started your own business, have an idea for a business, or even if you weren't the one who came up with the idea, but you're working for a new startup that's seeking to grow. Okay, so a lot of you, wow, that's fantastic. All right, I love it. All right, now put your hands down, because here comes the first question about funding. Raise your hand if you have sought funding for your business that is non-dilutive. And by that, I mean in the form of a grant or a bank loan that doesn't require selling a portion of your business as an investor. So and you can raise your hand whether that search for non-dilutive funding was successful or not. All right, so we've got a number of folks who have at least sought non-dilutive funding. All right, finally, raise your hand if you have sought funding from someone who would take an investment stake in your company. May it be friends and family, an angel investor, seed round, Series A. All right, that's a good number of you, but certainly not all. Well, today we're going to kind of try to at least hopefully get started on the process of demystifying that search for investment capital, because as you might guess, that's what the SEC does. So before we get started, I do need to give our standard disclaimer that it's both for John and myself that anything we say is on our own behalf, and we're not necessarily speaking for the full agency or any of our commissioners. And also that anything we say, you just should not take it as legal advice. We're just here to share our resources and speak candidly about what we hear from entrepreneurs and investors about the many challenges that we know there are out there with raising capitals, and share the resources that we have developed to try to help. So with that, I'm going to share my screen, or at least try to. So our roadmap today, first, John and I are going to go over a little bit about the SEC and our office, and then why on earth you should care about it, and then get into the content with our resources on ways that we have, resources we've come up with to help entrepreneurs seeking to raise capital. So we'll start off with what is the SEC. And I know that most folks, when they hear about the SEC, at least if you're from Texas like I am, you think it's the football conference, the Southeastern Football Conference. But if you happen to think of the government agency SEC, folks probably tend to think about, oh, you're here to protect investors and bring, enforcement actions against anyone who tries to defraud investors. And we definitely do that. There is maintain fair, orderly, and efficient markets, such as regulating large Wall Street broker-dealers. The SEC does that too. But something that folks may not think about so often with the SEC is our third prong of our mission, which is to facilitate capital formation. And that's one of the many folks at the SEC work on that, but that is the mission and the part that John and I focus on in our office. So what is our office? We are a small but mighty team of advocates that work to advocate for small businesses as they're seeking to raise capital. And we have a particular focus on looking for and identifying unique capital raising challenges faced by minority-owned, women-owned, rural businesses, and businesses that are not necessarily have as easy a time raising capital. So how do we do this? Well, as I mentioned earlier, we do a lot of outreach, and as you can see here with the events such as this. And when we talk about small businesses, we're really talking about a wide range of companies, everything from very early stage where you're seeking your very first investor, all the way up to smaller public companies. And so when we go out to do outreach, one of the things that we have realized is that a lot of those companies, while quite a range of companies, one commonality is that most small businesses don't have a government relations team. So, if you encounter a problem with our rules or with something that the SEC might be able to be helpful with, most entrepreneurs don't think to reach out to the SEC or don't have the bandwidth to do that. So that's when we go out to do outreach, whether it be in person or in webinars, we really appreciate getting feedback from folks, and we're trying to, proactively bring that in so that we can take that, take what we're hearing and take it back to our commissioners. And if there are policy changes that can be made, we really advocate for those kind of within the SEC. On the more outward facing, that's bringing stuff in. We also have a lot of educational materials where, capital raising, especially using the securities laws, is complex. And so we have worked to develop a lot of educational tools to push out to try to help folks understand, more about the securities laws. So with that, I'm going to turn it over to John to talk about why on earth you should care about the SEC.
Yeah, hi everyone. It's nice to meet you virtually. And thank you, Julie, for introducing us in the office. So as Julie alluded to, when you think of the SEC, maybe you think of enforcement actions or big IPOs or regulating broker dealers. Maybe you think of trading in markets. And you're saying to yourself right now, like, what does the SEC have to do with me and my small business, my small private company? And so I think, Julie, if you don't mind just going to the next slide here, I think what's most pertinent for purposes of our conversation is that the SEC regulates the offer and sale of all securities. It doesn't matter how big you are, if you're public, private, who you're selling to, right? You could be selling to a venture capital fund, you could be selling to your best friend, right? If there's an offer and sale of securities, it either has to be registered with the SEC or conducted under an exemption. Now, we'll go over the various components of that formulation a little bit more depth on this slide and the next slide as well, as we go through some of the educational material on the website later on. It might make sense as sort of an introductory matter, if for no other reason than just to get some vocab words, percolating, to think of that initial distinction between a registered offering and an exemption, right? So when you think of a registered public offering, maybe you think of an IPO, right? Initial public offering, direct listing, a secondary registered offering. And when you think of exemptions, and for folks, it looks like a handful of folks had already raised some investment capital. So maybe these are terms that are familiar to a handful of you. But when you're thinking of the exemptions, we're thinking of Rule 506B, private placement, Rule 506C, the general solicitation offering, Regulation A, Regulation Crowdfunding, Interstate Offerings, Rule 504. There are a whole number, and we'll touch on these. I just wanted to put that out now, just because they'll come up later on, and just as a sort of introductory matter. Okay, so what was the formulation? The formulation was the SEC regulates the offer and sale of all securities. First question, what's a security, right? I mean, that's a pretty good question. As it turns out, it's interpreted pretty broadly. So what we've done here is we've provided a non-exhaustive list of examples of securities that you may be familiar with, right? So stock, debt, membership interest, all terms that perhaps you've heard before. There are a handful of others. There are types of securities that fall outside the list of those that we've listed here. One thing to keep in mind, though, too, is that not all capital raising options necessarily fall into a securities bucket, right? So we mentioned here at the bottom, federal grants, donations, a few others are not necessarily securities. Okay, so what is a security? The first part of that formulation was offer and sale, right? Okay, sale, okay. An offer of securities, it sounds a little bit more nebulous, right? So we have the formulation up here. What do we say, right? We say it's a publication of information, it's publicity of information that conditions the public mind or arouses public interest in the issuer of the securities, right? It's basically, you're preparing the market, right? We have a few examples down here on the bottom. Again, a non-exhaustive list, but they are, avenues of offerings that you may find yourself running into on a daily basis, right? You call your friend to talk about fundraising. Maybe you mention something in social media, right? That's something to be aware of. Interviews, newspapers, podcasts, any number of other pieces of technology that I myself am not quite familiar with yet, right? Like there are avenues for offerings here. And if we look at this slide, if we look at the previous slide, and we think, well, it's pretty broadly interpreted. It's true, it is. And perhaps it's all the more reason to be vigilant when you're going through this process, either you're going through the process now or when you're going through the process in the future, to stay on top of it, right? To seek out the right counsel. Now, I'm going to hand the baton back over to Julie in a second to introduce the website. I will say, and this is echoing something that Julie had mentioned earlier, that the thread that runs throughout this presentation, and then a lot of the work that we're doing, a lot of the educational material that we're going to introduce on the website, the thread that runs between it is it's complicated. I mean, we give you a brief overview here. What's a security? What's an offering? There's a lot to keep straight. once we dig into the material on the website, you'll see that there's a lot to keep straight, a lot of terms, certainly a lot of legal terms, a lot of acronyms. And so what we're hoping to do is provide a foundation, right? It's not meant to replace legal advice or anything of that sort. But as you go into conversations, either with investors or with your attorney or with your co-founders or whomever you're having these conversations with, it's hopefully a good resource for you just to be familiar with the terms, to have a good foundation going in. Okay, in that case, Julie, baton handed back over.
Helps to be off of mute. Thank you, John. So John mentioned that we have our website materials, which is what I'm going to share next, because I think that is, okay, so this is the SEC's website, and you can get to our materials on this blue ribbon up here that says education, and you drop down to small business capital raising. And this takes you to our pride and joy, the capital business, or the small business capital raising hub. We're going to start with, I don't know if any of you read when you were kids, the Choose Your Own Adventure series, where you got to flip back and forth between the different pages of, oh, I'm going to choose this outcome or that outcome. Well, this first tool is what we call your Choose Your Own Adventure Navigator. Let's see here. Of course, we have to actually go there. There we go. All right. So what this does is it's going to ask 8 simple questions. That's going to kind of help to tease out what are the options that may be best for your business as you're seeking to raise capital. So we'll start with, does your business exist? Now, that's a pretty straightforward question, but obviously a lot of folks may come and say, well, I haven't incorporated yet. I'm not incorporated with the state. I haven't formed my LLC. So if you click no, it'll take you to some resources, not necessarily with the SEC, but with other government agencies that can help figure out, how do you incorporate your business and get it, at least established. But let's assume for purposes of our discussion here that yes, your business already exists. All right, next is, have you explored your options for external capital before focusing on raising capital from investors? So this is what we talked about up front. I think a lot of companies do like to start with a non-dilutive capital if they can get it, such as a grant or a loan. When you see this little did you know stat over here that I think is really interesting, because fewer than 6% of entrepreneurs raise capital from investors, which is a lot smaller than I would have thought it was. That's a stat that we have talked about a lot now, because it's not for everybody. And even if you do think it's for you, the capital may not be available. But let's just say you've explored the options for non-dilutive capital and you are ready to seek investment capital. So let's say you have. Now, as John talked about, there's a lot of alphabet soup of different exemptions that are available, the different pathways to raise capital. So if you've already decided which one you think you want to do, you can click yes, and it's going to take you out of the Navigator because you don't need to be here. You're ready to move on to start exploring the details of any particular exemption. But let's say you're in this Navigator because you want a little assistance in thinking which pathway might be right for you. All right, at this point, I would love to get a little audience participation on choosing your own adventure. You can put in the chat, what amount would you like to select here? And you can put in what you think your company is interested in raising. Folks can put in just what you think might be fun. And I welcome folks to throw that into the chat. All right, we're getting some, got a 1 million, got a 1 to 5 million. All right, well, that is a great place to start, because I think it is where a lot of startups are and seeking in that earlier seed stage round. So let's select 1 to 5 million. All right, the next question is a really important one when it comes to the securities laws, and that is, how do you plan to connect with your investors? So some people are fortunate enough to have a network where they think, okay, I already have an existing substantive relationship with people with whom I think I can raise capital. These are my friends and family. So you might select using my own network. But if you don't happen to have that network already available, and many do not, then you may need to go online or do some advertising and what we call general solicitation. So let's select that. All right, where are your investors located? So maybe you're lucky and you live in a very large state where you have lots of options in your one state, or maybe you need to look outside your state and do raising from many different states. So let's say out of state. And then final big question here is, are all of your investors accredited? And John's going to go into accredited investor definition more in a bit. Because again, it's kind of like general solicitation. It's a key concept when it comes to raising capital, because it's a lot of exemptions you can only use if you have accredited investors. So, but if you don't have them, then there are still exemptions for you. So let's click that no, all your investors are not accredited. So the results are in, as it says. And up here, you will be given, okay, it looks like the exemptions that would be most applicable for you would be regulation crowdfunding or regulation A, or some people call it the mini IPO. And then it gives you some other options down here that you may want to look into, but based on what you selected, those are not the exemptions that companies in your situation are using. So that's the Navigator. Get in there, play around. It's, as securities laws things go, it's pretty fun. One other thing I want to show before I turn the baton back over to John is our glossary of terms. This is, John mentioned there's a lot of jargon, and I'm sure if for those who've raised capital and for those who've started looking at it, you'll see you'll hear a little bit of everything and you wonder, what is that? Someone's accredited investor, angel investors, blue sky laws. I'm not going to read them all out because that would be really boring, but take a look at our glossary, because there are a lot of basic terms in here where we've tried to make it as plain English as we can. And then there's links to go further as you're getting, more into this. And again, as John said, these aren't terms that you necessarily, have to memorize or know everything about. But boy, if you can educate yourself and you think, I've heard that term a few times, I'm going to go check out that glossary from the SEC. Then when you go meet with your lawyer, hopefully the billable hours are a little less. When you meet with those investors, you can ask more, knowledgeable questions, and hopefully it will help you some with your journey. So with that, I will stop sharing my screen and let John take the reins.
Yeah, reins taken. All right, so for those of you who don't recall, this should be sec.gov, right? So just education, small business capital raising. Okay, so I think what I'm going to jump into are the building blocks, right? So Julie went through the Navigator right here, glossary of terms, now the building blocks. It's a pretty cool tool that we have. They go in more depth on a whole host of topics. Now, you can see here that we have a number of them, so I'm not going to go through the nitty-gritty on all of them. I do think it would be helpful to take a look at least at a few of them, if for no other reason than to give you sort of a sense of the flavor of what we have here. Now, keep in mind, and I'm keeping in mind what we saw earlier, that there are a number of folks that are at different points along the capital raising timeline. So for those folks who have raised capital, they're in later stages, we have building blocks down here. For those in the earlier stages, we have building blocks down here, and we'll touch upon these in a moment. I'm going to start at the very beginning, though, so bear with me. And this is pretty cool. It's how do I know if I'm ready to raise capital from investors? You can see here that we have this nifty little acronym, and I'll go through it in a second. But at a high level, these are things that you may want to consider before sitting down with an investor or with an attorney, maybe things that you want to consider as you're having conversations with any co-founders or employees or whomever else you may be having these conversations with. C, cap tables and financials, right? Investors very well may want to see clearly documented cap tables, right? The document that shows your ownership organization structure, right? I own X% of the company. Julie owns Y%, but Julie also has warrants for ABC, right? That sort of information. Financials, clearly documented financials very well may help a potential investor with diligence, but presumably also it help you to have your ducks in a row as you're thinking about your business and how it's progressing. Okay, A and P, they go hand in hand, right? Amount needed. You sit down. Hey, how much? The investor says, hey, how much money are you looking for? Well, a well thought out answer could behoove you, right? Have you taken account of projected expenses? How have you calculated those expenses? Can you substantiate it? P, plan for proceeds. Okay, great. You've got the money that you requested, you got a portion thereof. What do you plan to do with it, right? Cover the expenses. Are you going to, how are you going to pay the investor back? right? Things to think through as you're building out your business plan, as you're building out your capital raising plan. I, investor strategy. So a little bit of a different focus here, right? I think oftentimes investors, they may pitch to the extent that they're pitching, right? They may pitch that their value proposition is more than just financing. It's also advice, right? To serve in an advisor role. Obviously, folks, they specialize in different things, different sectors, different industries, maybe businesses that are at varying points in their progression life cycle, right? So just something to think about. Is the relationship that you're seeking from any one person best for you? Key time and resources. You probably don't need us to tell you this, particularly for those folks that have gone through this process already, but it's time intensive. And we highlight only in so much as it's time that is allocated to capital raising that maybe otherwise would have been allocated to product development, sales, what have you. You know, you all are the expert on that, but the point being that it takes a serious amount of resources and time sometimes. Okay, advisors, attorneys, accountants, right? Accountants certainly with the financial statements, attorneys. You know, do you have any securities laws questions, for example? Actually, Julie and I were we were at an event recently, and we were speaking with one of the founders there, just on the side, and we asked him, if there was one thing that you would have wanted to have kept in mind at the beginning, or that you would advise folks to keep in mind at the beginning of your capital raise journey, what would it be? And Julie, correct me if I'm wrong. He may have had another answer, but this was definitely one of the answers he had, which was that just having all the documentation in order, right? It's like governance documentation, maybe ownership documentation, right? There's paperwork that goes behind all these things. And that's certainly something that perhaps an attorney could assist with if that's something that you're looking at. And then finally, long-term vision. Presumably, this is something that you've given thought to with respect to your business, especially if you're progressing along that path, or you've progressed along that path already. But it may be something that you want to give a little bit of thought with respect to how to best articulate that. You get to sit down with an investor for, who knows how long. And so a pithy little pitch maybe, or anyway, think about the long-term vision. Think about the long-term vision of paying back the investor, right? That's probably something that they'll want to hear about. Okay, so that's capital. That's our first. Now, I really want to get into the pathways here, right? These are the regulatory pathways that both I mentioned up front in one of the slides, right? 506B, 506C, all the various exemptions. Also, Julie alluded to it earlier when she was going through the Navigator. I think actually before we go into the pathways a little bit, it may make sense just to double click on the building blocks with respect to accredited investors and then general solicitation. These are terms that'll come up, and it may just be a good sort of background as we look at some of the exemptions. So this one is directly to the left, so let's click on this first. Accredited investors. So what's the deal with accredited investors? Kind of like a Jerry Seinfeld thing. Well, listen, right, some of the exemptions have restrictions with respect to who can come in as an investor into your company. Not all of them do. There's leeway with respect to some of them, but some of them do, right? So particularly with respect to, like if you're looking at 506C, for example, where you can go out and broadly solicit folks, then you'll want to sort of verify or check the status of your investors, that they're accredited investors. Okay, what does it mean? It means that, well, there are a variety of ways of qualifying, but there's some degree of sophistication, right? Perhaps it's a financial criteria, right? So you can see here that we have either a wealth or an income means of qualifying. There's also professional criteria, right? So certain investment professionals, if anybody's here is looking to start a fund, certain knowledgeable employees of the fund. We won't go through all the details. Here's just a good sort of place to start your journey in looking at this. But suffice to say that there are a number of ways to qualify as an individual to become an accredited investor. And also remember, just keep in mind that this is on the investor side of things, not on your side of things. But it impacts you in so much as you're hoping that folks come into your that invest in your company. Okay, and down here in the bottom, we also have a variety of ways that entities can qualify to the extent that you have any entities that you're looking at as an investor. So again, sort of the same rubric, similar, like almost an analogy here, right? Either investments in excess of a certain amount, assets in excess of a certain amount, investment advisors, certain financial entities, etc. Okay. In any event, the point is that the securities laws, to a large extent, do look at who is coming into your company as an investor, and the term you'll see is accredited investor. So here is, here's just a sort of a background on that. Okay. Now, in a similar vein, a number of the exemptions not only look at who's coming in, they're also looking at how are you contacting them. And so a term that you'll see is general solicitation. Certain of the exemptions preclude you from generally soliciting investors. What does that mean? Well, broadly speaking, it means broadly soliciting. Let me see here. Right, so we have a number of examples, again, non-exhaustive, but if you're putting an advertisement out in the newspaper that says, hey, I've got this company, I'm looking for investors, that very well may fall under the rubric of general solicitation. Websites, television, radio, seminars, there is an exemption for demo days that we can talk about in a moment. But the point being that when you're looking at the variety of regulatory pathways that you may want to pursue, just keep in mind that some of them preclude general solicitation. 506B, private placement, for example, a very prevalent regulatory pathway, does prohibit general solicitation for what it's worth. Okay, so what does that mean? Well, we provided a few examples. Are there any proactive steps that you can take to avoid general solicitation? Yes, right, so we have, here we outline the pre-existing substantive relationship. So, if you have a pre-existing substantive relationship with somebody, then you're not generally soliciting them. What does pre-existing mean? Well, it is what it sounds like, right? The relationship formed before the start of the offering. A substantive relationship, what does that mean? Well, it means that you have a relationship that's sufficient to evaluate whether or not that this potential person, this potential investor, is an accredited investor. Okay, so if you have a pre-existing substantive relationship with someone, then you're on better footing with respect to general solicitation. Also, demo day events. This is another sort of exemption or sort of avenue that's carved out a little bit, perhaps of interest to many of you. And you can see here what the key criteria are for demo day exceptions to general solicitation. Okay. All right. Okay. So we've talked about accredited investor status. We've talked about general solicitation. Let's go back and take a look at the various pathways. All right, so you may recall that the very first slide I talked about, I said, hey, let's start thinking about a few vocab words. Right, here are all the exemptions. We'll come to these. These may be of particular interest. But I'm going to scroll to the bottom of the page first. Just highlight that we have information here on registered offerings. To the extent that that's something that you're interested in, there is plenty of opportunity on the site to go down various rabbit holes, right? Okay, I'm interested in registered public offering. What's required? Okay, well, a registration statement with the SEC is required. Okay, what's a registration statement? Here we go. All right, I won't read through all of it. There's a lot of material on the website, but hopefully that just gives you a flavor of things. Right, we have all these options here. All righty, so you can either register the offering with the SEC, or you can find an exemption, right? And so here are the variety of exemptions. Rule 506B, private placement, a fairly popular one. You can raise an unlimited amount of capital, not generally solicit, however. There are certain rules with respect to how many non-accredited investors you can bring in. So you can, in fact, bring in some accredited investors. What is it? It's 35 here, right? It may not be sold to more than 35 non-accredited investors. And there's a lot of information here, right? Of course, like we're dealing with securities regulations, right? So in fact, Rule 506B of Regulation D is a safe harbor under Section 4A2. You know, if you want to learn more about Section 4A2, here you go. In any event, again, I'm just going to give you the high level. and there's plenty of time or plenty of opportunity to dig through. Okay, it's 506B. What about 506C, general solicitation? Maybe you go through the Navigator and it turns out that, hey, to the extent that you're looking to sell securities, you want to be able to generally solicit. Okay. We'll take a look here at the various conditions that need to be met, right? First of all purchases are accredited investors. That's what we talked about, right? Everyone is meeting a certain, either if they're individuals, a certain financial or professional credential, or not credential, but they're exceeding a certain standard, a threshold. You take reasonable steps to verify, among other conditions. Okay, I'm going to try not to bore everyone by reading through everything here, but I think you get the idea. Rule 504, limited offerings. You can raise up to $10 million in a 12-month period. Say I'm not going to do it here. Yeah, I'm doing it again. Clicking through. All right, you can see all the various, the variety of rules with respect to Rule 504, limited offerings. Regulation crowdfunding, perhaps something that's something that you've heard of or you're interested in. Okay, all right, here we go. All transactions, they take place through an SEC registered intermediary, et cetera, et cetera. You can raise up to $5 million in any 12-month period. And again, a limit on non-accredited investors, right? That's why that was so important up front. And then finally, yeah, oh no, not finally, excuse me. Well, let's go to Reg A first. Reg A, there are a number of tiers, or a number, there are 2 tiers. You raise up to $20 million in a 12-month period under tier 1, $75 million under tier 2. They're called mini IPOs. Variety of conditions to go along with it. These relevant FAQs, by the way, they've been here for each of them, so you can click through. What exactly does it mean to have a bad actor disqualification? Things like that. Okay, and then finally, interstate offerings. These are offerings raised in any particular state. They're subject to, oftentimes subject to state law as well. And it looks like here we say oftentimes between $1 and $5 million in a 12-month period. So again, just to sort of, I'm going to show you a different tool in a second here, but just to try to tie it together, right? To the extent that you're looking to sell securities in your company, you're going to want to try to identify which security pathway, right? Which capital raising pathway you fit under. Is it a registered offering? Maybe. My suspicion is that many folks on the line are going to be interested in exemptions. I don't know, but a suspicion anyway. So hopefully this is a good place to start. At the very least, maybe before you start talking to an attorney or whomever else, right? Just to get a groundwork. Alrighty. What else can we look at here? All right, so these are building blocks, right? I think it's cool. It provides good substantive information. I just want to take a look at maybe another tool here. By the way, if you want to, right, we have the building block and exempt offerings. Here's another chance to go here, get a little bit more information, 506B, right? Everything that we talked about. And maybe a little bit more than we talked about. Employee benefit plans, filing a Form D. To the extent that you rely on some of these exemptions, a Form D, which we refer to here, may need to be filed. So just something to take a look at. Okay, so I'm going now to take a look at capital trends, right? So we've talked about the variety of exemptions. And this is a cool survey tool. It says, listen, I'm in Tennessee. How often and to what extent is regulation crowdfunding being used, or people raising capital with regulation crowdfunding? All right, so we see that in 2021, 9 such cases, your total raised of about $3.33 million. Now, that's regulation crowdfunding. What if we went to regulation D, a little bit more popular, right? Let's go to, California is what it is, right? So let's look at Colorado, right? So over 1,000 offerings for over $10 billion. Just a cool tool to sort of play around with and take a look at. It doesn't necessarily have any, I wouldn't feel confined by anything at all, right? Like you use the pathway that's best for you. But just if you want to have a sense of what the landscape looks like, if you're in Oklahoma or New York or wherever. And we have a variety of years, a variety of pathways, right? Look at registered offerings just for a second, right? Registered offerings. I mean, that might be a little bit different than what a lot of folks here are looking for. But anyway, the point is what it is, which is that, you know, they raise a serious amount of money doing it. Okay. All right. Yeah. So that was a survey tool. Julie, I think I will hand the baton back over to you to cover a few other resources.
Excellent. Thank you, John. I feel like no one should need a lawyer now because John has given us all the keys to the kingdom with the, I'm kidding.
Not legal advice. Not legal advice.
Definitely not legal advice. Would never dream of it being so. But please do, you know, take a look at the website. There's lots of good resources there. And I just dropped it in the chat, but we're going to have time for Q&A at the end. So if you have any questions that we could, you know, try to answer here in real time, we're happy to try to do that. To share our Engage with Us slide with all the participants today, you should get a copy of this. And then obviously we couldn't share in a slideshow everything that we went through on the website, but we did put a few, hopefully reminders of the various sites like the building blocks that John was going through so that you can find those. But here we have our contact information. We really do encourage you to engage with us. We love hearing from folks, both with, you know, issues that you found or issues that you think we might be able to help with. Just send us an email at smallbusiness@sec.gov. or go on our website. In addition to all the educational materials that we've been demonstrating today, you can find events such as this. We advertise, you can go back and watch old events to the extent they were recorded and are there. You can follow us on social media for new things that may be coming out. So with that, I would love to go into Q&A. Let me stop sharing so that I can see the Q&A. One question we got in the chat was a great question about general solicitation. As John was talking about general solicitation, someone asked, you know, what would posting a video or a slide deck of a pitch be viewed as, you know, general solicitation? So this is where going back to that website is going to be so helpful when you have a question. You know, is what I'm about to do, could that potentially be general solicitation? Which again, the point of being interested in knowing if it's general solicitation is if you're looking to do a 506B offering, you're not allowed to generally solicit. So you don't want to blow your exemption. You know, John was saying you either need to have a registered offering or a valid exemption. So if you think you're going to do a 506B and you accidentally or intentionally generally solicit, then you have blown that exemption for the time being. So you can go to those building blocks. And if you go to the building blocks, it'll say, what is general solicitation? And one of the elements there is that you have, you know, marketed the securities, and we have an example of an unrestricted public website. So if you post your pitch deck on your unrestricted public website, you know, again, I can't give you legal advice. There may be facts, and every lawyer will always tell you everything is facts and circumstances, but go to the resources, check it out. You know, putting a pitch deck on an unrestricted public website is going to be general solicitation. So that was one of the questions that came up, and we get that question a lot. It's a really good question because, you know, in this day and age, a lot of stuff is done on the web. So it's very easy to, you know, unintentionally find yourself having generally solicited. So Anthony asked a great question in the Q&A about, he asked, could you provide some guidance or point us to guidance about capital raising, either non-dilutive or capital, for government contracting companies? So this is a great question, one we also get a lot. And it's great because it does not matter. The SEC does not, I don't want to say we don't care, because of course we care very deeply, but we are completely agnostic as to what your type of business is. So if you are a government contracting company, if you are a software company, if you are any type of company, a manufacturing company, the securities laws apply the same to everybody. So you can go on the website, you can check and see, okay, what are different options for anybody? And maybe for government contracting companies, it's going to be the same thing where you look and you say, do I know my investors? If so, maybe I don't need to generally solicit. How much money do I need to raise? Because how much money you need to raise will determine which pathways are available for you. If it's over $5 million, then crowdfunding is not available to you. But if it's under $5 million, then maybe crowdfunding would be an option. So it's not so much industry specific as much as what amount of money do you need and where are you going to find your investors? That's really the key when you're looking to kind of figure out your capital raising options. Allison asked a very good question about recent rules that just came out. We didn't talk about these today, but she said, I see there's inflation adjustments about to be published with respect to the reg crowdfunding tiers. And she asked, when are those going to be published in the Federal Register? I don't know the answer to that because we don't control the Federal Register. I hadn't seen them as of this morning, but I would expect that it would be relatively soon. So I'm sorry, I don't have a more definite date. That's just kind of how the Federal Register works. But it's a great question because you're right, those do go into effect as soon as they are published in the Federal Register. Let's see, I'm looking through the other questions here. Let's see. Someone gave a really good point, said, please give a warning about unlicensed broker dealers claiming to help small and medium businesses raise capital. And that is a great point. We definitely hear about, unregistered broker dealers, sometimes called finders, that, maybe trying to help. You really need to look up and see if you think they're engaging in something that may need to be registered as a broker dealer. We have what we call the broker check feature on the SEC's website. And if you go to investor.gov, there's a broker check, and you can go in there and you can look to see, is this person who's telling me they're a broker really registered with the SEC? And you should be able to type in their name, and that'll show you if they're registered. And you should ask them. That is a great question. And any broker dealer who is worth their salt should be able to quickly tell you, yes, I am, or no, I'm not. And if they're not, then you need to really be thinking about, okay, what kind of what relationship are they trying to hold out here? Because you don't want to be in a situation where you've used an unregistered broker dealer, because it could hurt your damage your exemption. Back to John's point about every offer or sale needs a valid exemption. So those are the questions that I have seen so far. Someone asks if there's a resource to find bad actors in the industry. I'm actually not aware of one that lists them all. So I'm sorry, I don't have a good answer on that one. But you are wise to be alert, because there are some out there. Here's one about NFTs. Recently, people are raising capital via selling NFTs. Some promise free utility if you purchase and own the NFT, such as free crypto, free NFTs, ownership in a company. How are these viewed? And since it is such a new way to raise money, that's a great question. And crypto is definitely a new way that we hear about a lot. And the SEC actually has a specific office that is set up to deal with all these. They're very complex questions because, and again, it's so great that John gave us this overview of what is a security. And many of these crypto utility tokens, they likely are securities. And so we encourage you to reach out there's a specific office here at the SEC, and you can find them at sec.gov/FinHub, which stands for the, I think, financial hub. I forget what it stands for, but it's Fin, F-I-N-H-U-B. And please reach out to them with questions, because you can bet they're getting a lot of these questions. Someone else is pointing out a great point. The broker check on finra.org is another source that you can check for bad actors, and again, to see if your broker is registered. That's it. So, well, I'm going to just encourage everyone, if you have additional questions that you think of afterwards, or that you want to, whether it's a question or just an observation of something you've seen, or maybe you hear a term, oh, you should really add that to your glossary because I hear that term all the time, and people misuse it, or I don't know what it means. Email us, send us the term, and to the extent we can, we will try to, that's how I would honestly say most of the terms in our glossary came up, where we get questions of people saying, I don't really understand what a convertible note is. And so that's when we thought, okay, it's a great term to add in there. So appreciate all the kudos. We're getting some kudos in the chat, which I really appreciate. So again, really encourage you to continue to reach out to us. It's not just John and me in the office. We have a few other attorneys as well, and we're always happy to get back to you as quickly as we can. And if you know of other organizations that we can do, presentations for, reach out with that as well, because we like to, spread our materials far and wide. We are happy to generally solicit our materials. So with that, I would love to turn it back over to, I guess it's Natalia. We'll take it from here.
Thank you so much, Julie and John. That was really great, a really valuable presentation today. And I can say on behalf of our founders here, it was really, really informative. Thank you so much.
Well, thank you for giving us the platform. We appreciate it.
Yes, and I think we had really good engagement. You've answered most of the questions, so we're good. Thank you. Anything, if anybody asks for the introduction, we'll make the introduction. So you can write it to us also, and you can write it to them as well. We'll make the introduction for sure. And thank you so much. We'll be sharing the presentation with you. All right. So we have a couple of minutes left for our next session, which is on UI and UX design, the game changer in your product's journey by Amanpreet Singh Bhullar, Creative Director at Kivitec. Before that, I would just like to make a quick announcement about one of our programs, which is called Referral Program at Kivitec. This program rewards anyone who contributes to fruitful introduction to our company. Over the years, we have built this robust ecosystem of startups with the help of your trust and subsequent referrals. We realize it's time we give you due credit to this trust through our referral program incentives. So if you have someone looking for tech development support to scale, join our referral program and follow the mentioned steps shown on the screen, or visit our website in the chat below to learn more.